Have you ever wondered what happens when a major global player suddenly shifts its financial strategy? China's dramatic reduction in US Treasury holdings is sending shockwaves through the global economy. But what does this mean for you and the world at large? Stick around as we dive deep into this financial power play and its potential impact. In recent years, China's financial maneuvers have become a focal point for analysts and economists worldwide. As of August 2024, China has reduced its holdings of US Treasury securities by more than 39% from their peak, bringing the total to approximately $770 billion. This significant reduction is more than just a number, it marks a strategic shift with potential global repercussions. Let's explore the historical context and future implications of this move. China's investment in US Treasury securities began in earnest during the early 2000s, driven by country's rapid economic expansion and trade surpluses with the United States. By 2002, China's holdings had reached around $100 billion as it sought to manage its burgeoning foreign exchange reserves. Between 2005 and 2010, China's treasury holdings saw significant growth. This period was characterized by China's efforts to stabilize the yuan against the dollar amidst the global financial crisis of 2007 to 2008. By 2009, China's holdings had surged past $700 billion, reflecting the increased demand for these safe haven assets. The peak of China's treasury holdings came between 2010 and 2014, reaching an all-time high of $1.316 trillion by November 2013. During this period, China's strategy was focused on stabilizing its currency and managing its foreign reserves amidst consistent trade surpluses. Starting in 2015, China began to shift its strategy, reducing its US Treasury holdings as part of a broader effort to diversify its foreign exchange reserves. By 2019, these holdings had fallen to approximately $1.1 trillion, and this decline continued through 2020, driven by rising US interest rates and escalating geopolitical tensions, with holdings dropping to $781 billion by September 2023. If you are finding this information fascinating, please hit that like button and share this video with friends. It helps us bring more insights like this to you. China's reduction in treasury holdings has led to an increase in treasury yields. With fewer foreign buyers, the US government is forced to offer higher returns to attract investors. The rise in yields translate to higher borrowing costs for the US government, which can have a cascading effect on mortgage rates, corporate debt, and overall economic activity. The large-scale reduction in China's treasury holdings has also contributed to market volatility. Reports of substantial sales can lead to sharp movements in US futures markets and fluctuations in the dollar as investors react to changes in foreign demand for US debt. So what's the big picture? Could this financial maneuver signal deeper geopolitical shifts? Keep watching as we unravel how these changes might reshape global economic policies and international relations. China's move to reduce its US Treasury holdings is part of a broader strategy to decrease its dependence on the US dollar and the American financial system. This diversification includes investing in other assets like gold and European securities, aiming to reduce risks associated with over-reliance on US debt. The reduction in Treasury holdings may also indicate a trend towards economic decoupling between the US and China. As geopolitical tensions rise, China's financial strategy could be a response to US sanctions or economic measures, reflecting a growing caution regarding US fiscal policies and debt sustainability. Despite its reduced holdings, China retains a significant portion of its foreign reserves in US Treasuries to maintain financial stability. This strategy helps avoid destabilizing the global market with a sudden sell-off, ensuring that China's financial stability and relations with the US are not adversely affected. China's large stockpile of US Treasuries provides it with strategic flexibility. In times of economic uncertainty or capital outflows, China can liquidate treasuries to stabilize its currency or fund other priorities. This strategic buffer ensures China maintains leverage without resorting to drastic measures. What's your take on China's strategic shift? Share your thoughts and predictions in the comments below. We are eager to hear your opinion and discuss further. The outcome of the 2024 US presidential election could significantly influence China's approach to its US Treasury holdings. A victory for Donald Trump might lead to a more confrontational approach towards China, potentially resulting in higher tariffs and aggressive economic measures. This could prompt China to further reduce its treasury holdings as a defensive strategy. However, Trump's transactional diplomacy could also introduce opportunities for negotiation, adding an element of unpredictability. If Kamala Harris wins the presidency, her approach is likely to continue the Biden administration's policies of economic engagement with caution. This pragmatic stance suggests ongoing interaction with China while managing economic risks. Harris's focus on strengthening alliances and maintaining tariffs would imply that China might still view US Treasuries as a necessary part of its financial strategy amid geopolitical uncertainties. China's reduction in US Treasury holdings marks a pivotal shift in global financial dynamics, reflecting broader economic and geopolitical trends. This move impacts the US economy through increased treasury yields and the market volatility, while signaling China's intent to diversify its reserves and reduce reliance on the US dollar. The upcoming US presidential election adds another layer of complexity, potentially influencing China's future financial strategies. Whether facing a more confrontational or pragmatic administration, China's approach to managing its foreign exchange reserves will continue to play a crucial role in shaping global economic stability. China's shift away from US Treasuries is just one piece of a complex global puzzle. As we continue to monitor these changes, we'll uncover more about how they shape our world. Stay tuned and keep informed with us. Make sure to like, subscribe, and hit the notification bell. Your support helps us keep bringing you the latest and most insightful content. Thanks for watching.